Welcome to another exciting episode in accounting, which is the accounting equation. This accounting equation is very important in the sense that this guides us when we are preparing our statement of financial position, which is formerly known as the balance sheet. So it stipulates the relationship between assets, liabilities, and owner's equity. So the equation stands like this: assets is equals to liabilities plus equity. So what are assets? Assets are the value of the things or particulars which are owned by business. And examples of assets include cash, property, plant and equipment, accounts receivables, rent received, among others. And liabilities are the dues of a business. This is what the business own or owe from other business or from other people. And they include the likes of loans, debentures. These are what we call liabilities, as well as our payables, formerly known as creditors. They might be long term or short term. Then equity, this is what the owners of the business invested into the business, like capital or shares. So this is what we call the accounting equation. We might explain much into these terms. On assets, we've got what we call non-current assets and what we call current assets. Non-current assets are those which were formerly called fixed assets, which have got a life expectancy of more than a year. These include buildings, motor vehicles, property, plant and equipment, as well as copyrights, although they are not tangible, but they are long-term assets. Then on current assets, we've got cash, we've got our debtors, which are now known as accounts receivables. We've got prepayments. For example, we paid electricity in advance. That one is an asset which is current, but it's supposed it is a current asset in the sense that it's going to be belong to the business for a period which do not exceed 1 year. Then on liabilities, we also have got current liabilities and long-term liabilities. Current liabilities are supposed to be paid within a period of a year, and this includes our accounts payables, which are also known as the creditors. We also have got arrears. For example, we've got rent in arrears. Those types of liabilities are supposed to be paid within a period of a year. But when it comes to loans, you can have a 3-year loan. You can have debentures which can last for over 10 years. These are what we call long-term liabilities. Then on equity, it now depends on whether the business is a private or it's a is owned by a single person, or it's a corporate or a company. If it is owned by a single person, that's what we call capital, that which you invested into the business. And when it is a company or a limited liability company, that's where you get equity in terms of shares. So this is what I can explain concerning the accounting equation, which also helps us in preparing our statement of financial position in accordance with the AIS 1, where we share presentation of financial statements. Thank you very much for your time.